Hello, everybody. Thanks for dialing in today. My name is Dan McGinnis, and I'm the Chief Underwriting Officer of CapSpecialty. Just a reminder before we get started that the content of this webinar is the property of CapSpecialty and it's for informational purposes only. You're not permitted to republish, share, or quote from this webinar without the prior written consent of CapSpecialty, which can be obtained by contacting marketing@capspecialty.com. And we hope you enjoy the webinar. All right. So today in this risk management edition of 25 Minutes with CapSpecialty, we're talking about artificial intelligence in excess and surplus lines underwriting. I'm joined by Paul Monasterio and Daniel Hillman, entrepreneurs and co-founders of Kalepa, whose signature product Copilot is decision support software for commercial underwriters. Welcome, guys, and thanks for joining me today.
Happy to be here, Dan.
Great to be here, and thank you for having us, Dan.
Awesome. Thanks so much. So we've been working with Kalepa for a long time now, and I can tell you that from a user perspective, AI or artificial intelligence is a long game. When you understand what AI really is, it makes total sense that it's a long game because the value comes from learning and continuously adapting that learning to make better and informed underwriting decisions. So before we get into the details, let me tell you why AI is important to me as a chief underwriting officer of an insurance company. I believe that underwriting is part science and part art. The underwriter is certainly expected to understand the science behind the risks they underwrite, matching the basic rates, the general exposure, the geography, the limits offered, and so forth. And then the art is the judgment about how the individual risk compares to the average risk that's supported by the basic rates. Is the risk I'm underwriting more risky than the average risk, less risky, or right in line with the average? That judgment is where, to me, money is made or lost. AI is a tool to help get in the noise that comes from variations in judgments that could or should be identical, and which leads to a suboptimal risk selection. Now, consider that we're underwriting ENS risks, and what ENS really means. Risks that end up in the ENS or excess and surplus lines market, they're there not because they're simple. Pound for pound, ENS risks require very good judgment. So before we go further, the discipline of predictive analytics has been around insurance forever. To set the groundwork for this discussion, could one of you guys give us an example or a simple definition anyway of AI, and then importantly, how it's different from predictive analytics?
Absolutely, that's an excellent question, Dan. And in many ways, it's helpful to think of predictive analytics and AI as 2 points in a continuum. Ultimately, as you have mentioned, insurance has been in the business of analyzing, understanding, and extracting patterns from data from the very beginning. And really, this is just the latest iteration of that. You could imagine going back to the days where you're looking at a ledger and understanding claims and understanding and figuring out that certain types of businesses, certain types of individuals are riskier than others. Then you move into predictive analytics, which is really putting in place all the computational tool work that has been available in the last couple of decades to do that faster, to do that more extensively, to do that more exhaustively. Really what AI is in this continuum is taking advantage of the fact that computers can now learn to mimic some of the abilities that a human could do. And they can do that poorly, or they can do that very well in some cases. But it's nothing more than trying to look at that data and surface patterns that would be difficult or very time consuming for a human to do. And in the case of insurance, of course, as you mentioned, in excess and surplus lines, it is that proverbial needle in the haystack where the money is made or not made. And what the AI is really doing here is just doing what an underwriter would do. They had all the time in the world to look through that hay and pull out that information, but it's doing that a little bit smarter way with a magnet. Dan, I think you might be on mute.
Thank you. I muted because I was afraid I was giving some feedback there. So my view, and I wonder if you agree, AI and predictive analytics are complementary and not necessarily mutually exclusive.
Absolutely, absolutely. Predictive analytics is about understanding what is happening now. So a lot about summarizing that information, about understanding and forecasting certain patterns. That is extremely important. Where AI comes and complements the predictive analytics stack is in then learning and identifying from that rich source of information patterns that will be difficult to spot otherwise.
Awesome. So now we can peel back the layers a bit more. So make the best of the next 20 minutes or so, try to organize our thoughts around the three areas of the impact of AI, the technology around it, and then collaboration. Because as I think that we've discussed many times over the past 18 months or so, and as we'll talk about today, collaboration is such a big part of a good artificial intelligence tool. So in the area of impact, there's certainly a lot of buzz about AI and insurtech. How do you drive real impact to underwriting quality within ENS, which is especially difficult to underwrite profitably using artificial intelligence?
Yeah, I mean, the reality is that you highlighted earlier, right? AI is a tool, and there are many tools in the arsenal. And tools are only helpful if they are applied to problems that benefit from that tool. And AI is no different. The first really crucial component in addressing real problems, having real impact, is to be focused. What is it we're trying to do? As leaders in business and technology, identifying what are the problems that we're finding, where using the machinery of AI can actually produce an actual underwriting edge. That's paramount. Basically you try to do AI for AI's sake, AI for buzz, AI because it's in the news. You're going to be spending a lot of effort into something that's not going to yield much value. After that, it's really a matter of understanding where the AI excels and where it doesn't. And in the case of excess and surplus, it is true that oftentimes there are exposures, there are controls in a business that are difficult to elucidate, but where AI can do that very well. The computer doesn't get tired. The computer can look at a million data points and then find the one that matters. On the other hand, there are things that the computer and the AI, no matter how smart, does not do well. A lot of that judgment, a lot of that depth of understanding what then changes that decision is where the underwriter comes in. And really marrying those two, marrying what the machine does well, what the human does well, is very important in actually yielding true value.
Yeah. Yeah. Sorry, Dan, did you want to jump in there?
Oh, no, please go ahead.
Okay. Yeah. So I think a good point about the human. What does the human do well? What does the AI do well? I think in my time in the business and following these. By the way, could you would you mind muting? Just getting a little bit of feedback on your connection there. What's that right first step to make? And so I think if used poorly, AI can certainly be an inferior substitute for human-driven underwriting. How do you bring the best of human and machine intelligence to deliver superior underwriting? It's a hard thing to do, and maybe, to be quite frank, I think a big part of it is because we are humans and we're creatures of habit. So introducing something new there, it's difficult. How do you do it?
Yeah, it's a good question, and it's an astute observation. And ultimately, AI is not some magic solution that you can just make your problems go away with. And I think we all must be humble in how we view the benefit of technology. The reality is that underwriting is hard work. It takes a lot of expertise. It takes a lot of training and a lot of talent to make the right decisions. And so recognizing that the underwriters are kind of a critical component of the insurance value chain, really the opportunity is to not substitute them, but augment them and enable them and help them achieve their kind of day-to-day objectives. And the way that plays out is obviously, computational power is incredibly powerful. AI can do, be a force multiplier of underwriters. And the way to really harness that is by having the software and having technology identify what are the exposures, what are the controls, what are those needles in the haystack that the underwriter should be aware of. And so really by getting kind of the value from the technology where it exists and getting the value from the underwriter to help that technology, and to utilize it to make inferences, the AI gets better and the underwriter achieves a better outcome.
Yeah. So I enjoy in my role, I enjoy a bit of a vantage point in terms of seeing a variety of claims and things that can happen. That when you're underwriting a specific line of business, you might not necessarily have total exposure to the breadth of things that can happen. And I think that's certainly one of the things that I personally see as as a value is really kind of tying, sort of what can happen to finding those proverbial needles in the haystack. So the underwriter can see the things that are clearly not going to be evident in the application, but help them to avoid things that are going to end up in a claim and end up in them feeling frankly crappy about a risk that they put on the books. How talk some more about how insurance practitioners can utilize AI and data science to affect day-to-day changes in their decisions and underwriting behaviors.
Yeah, absolutely. And I think it's particularly acute in excess lines, which is, you think about it, and then as well, and the folks in the audience do too, really what you would like to do in an ideal world as you're writing a risk is to know who the noisy neighbor is that's there 24/7, that is looking around, that knows everything that goes right and everything that goes wrong with that business. And we'll tell you that. And the closer you get to that, the closer you're going to be to making a profitable decision that really helps everybody, right? You're providing the coverage that's needed and no more. You're doing that at the price that's needed to balance that risk and transfer it properly. Well, how can we use AI to get us there? Data is an ingredient, but data actually is not the solution. Data is one component. More data doesn't mean a better underwriting decision. More data means that the underwriter has more things to look at that, really is adding more hay to the haystack pile, not getting them closer to the needle. So the question is, AI and data science are helpful in helping those underwriters identify what matters. And that really is the core. The differentiation between the great practitioners and those who are not is not more data. It's not fancier buzzwords and acronyms. It is really around tying that data to an actual change in an underwriting decision. How does that happen in practice? Well, there's one component, which is turning that data into something that is interpretable. So can you surface those exposures? Can you present that judgment, that recommendation to a human in a way that will lead to a decision? And then the second one is to learn. The software and the AI needs to be there and learn what it is that the good underwriters are doing and get better as a result. When you have those two ingredients, you really make a real difference, because it's not really AI for the sake of AI. You're actually driving a different outcome than you would otherwise.
Yeah, so I think you took me right into the next area of the three that we want to talk about, which is technology. And first question I was going to ask in the technology space is, will more data help us to underwrite better? I think you just answered that. But I think another question I think is an interesting one is how do you think about the historical trade-off between speed and quality of underwriting, and then how can technology and AI help? I think there's an element of there's the law of large numbers. It's one of the basic principles. If you've studied insurance, it's one of the basic principles of insurance. And so maybe another way to put it is, and sometimes I put it this way myself, is hitting for average. And so if you kind of spread your chips around, you're ideally going to hit on something, and just hope that you don't go too wrong the other way. But talk a little bit more about this. Again, the question of how do you think about that trade-off between speed and quality of underwriting, and to the extent, I mean, I look at just to finish my thought on that the law of large numbers thing is anymore it seems that no matter how bad of a catastrophe property catastrophe season you might have, wildfires, things like that are going terribly wrong, it just seems that there's an unending amount of capital that comes back. So it really is important to make sure that you're picking your spots, and I think doing them really well. So give me some of your thoughts on again, that trade-off between speed and the quality of underwriting. How can tech and AI help?
Yeah, absolutely. I mean, this is a question that obviously has been ever present in the industry, right? Which is, if you go back to the noisy neighbor analogy, sure, you can get closer to that by taking longer when you underwrite. Like if you order more inspections, if you ask more questions, if you get there, I get you closer to finding out what might be going on in that business, and then you will make a better decision. But of course, the pressure is on the underwriter to do this quickly, and brokers want the submissions processed yesterday. So that tension there has historically been a challenge, and many of the improvements that have been made in underwriting being around that. Unfortunately, those have not necessarily yielded the improvements that we would hope to the expense ratios. But certainly that has been kind of the ongoing impetus. What technology can do is really remove that trade-off. It's a matter of, can you get a better understanding of the business and the exposures and the controls, the true risk versus that perceived risk, but doing so in a way that's efficient. And you mentioned that analogy of, the batting average. It is batting average at the end of the day, right? We're working in the law of large numbers. And then you may say, well, you can hit for power or you can hit for average. And until you find one person that hits for both. And that's the guy you want, right? And ultimately, that's kind of what we're trying to do here. Can you bring the machine to help you hit for both? How can you do that? Well, you basically know when you hit for power and, what are the pitches that will allow you to hit the home run. But the other times, just get the single. Get the single if you can. And you don't have to trade that, right? The beauty here is that many of the aspects that will be difficult for a human to do can be done well by the machine. And then you actually then empower the underwriter, the human, the expert underwriter, to only spend that time, that precious time, on what matters. So you actually can get a better decision and do actually that quicker than you would otherwise.
All right. So let's talk about inspections, because I know we've sort of talked around this a little bit already, but something that is always kind of rolling through my head is their inspections. They're a normal part of the insurance underwriting process. They've been that part of the process forever. There's some inherent inefficiencies about it. You're sending a person out, an expert. That's just inherently not necessarily scalable. How can AI help conduct virtual inspections, which can be incredibly valuable, but again, sometimes not very scalable and come after the fact when you're already on the risk? Talk about AI helping virtual inspections, maybe beyond what might just be sort of obvious, if you will. Oh, Danny? There you go.
I'm back. Yeah, great question. This was especially important over the last year during COVID, where inspections were very difficult to execute and oftentimes just impossible. And so the reality is that an inspection is a very helpful diagnostic, if you will, about how a business is running, but it's actually limited to a very narrow snapshot in time. So it's at a specific location, on a specific day, at a specific time, perhaps even coordinated in advance. And so while that can give you a good understanding for how that business may operate, it really oftentimes lacks in terms of the breadth and the depth and how that business kind of operates day to day, week to week, month to month over a given year. And so AI really has the potential to actually fill in a lot of those gaps and provide a different perspective that is oftentimes complementary or even useful as a substitute, because as you mentioned, inspections are costly, and really for the smallest risks, they're often impractical because you can significantly erode the profitability of any account by doing on-site inspections, especially in remote locations. And so one of the examples there relates to imagery. And so a good inspector will naturally take a lot of pictures on site, and that'll help us get a sense for kind of what is taking place there, what equipment they have, what the premises looks like. But the reality is that actually there are tens of millions of images out there about Main Street businesses across the US. And actually AI is very adept at utilizing kind of that raw data to make inferences and observations about a business. And so computer vision is actually a very useful tool in order to understand more about that business, not just on that single day of an inspection, but over time. And so, one of the things that you might want to understand is what is the clientele that's there? What are the hours of operation? What are kind of the specific risky behaviors that might be taking place there? And actually taking a much larger corpus of observations can actually help you understand things that you may not be able to pick up during an inspection. And fortunately, AI also has a very quick ability to learn and very good memory, computationally wise.
Yeah, it's good point. And the older I get, the more envious I am of that feature of AI. So I think that a lot of these comments kind of naturally roll into the third area that we wanted to talk about, which is in the area of collaboration. I think we've talked about this a bit in a lot of the comments, and hopefully that to the people that are listening, that's a pretty common theme here. Is that this is about marrying up enhanced technology with human behavior as well. So in the area of collaboration, let's just kind of start generally. How can AI help to improve collaboration between me, the underwriter, and my distribution partners, and then between an insurer and insureds and so forth? Talk a little bit about your thoughts on that.
Sure. And obviously we're having a conversation about AI, and so a lot of us and kind of a lot of the folks on the line are data geeks, are very interested in data. But lest we forget that insurance is ultimately a people business, and so that is really very central to how every insurance company should think about working with partners. And that really comes down to how do we use AI to strengthen those relationships and to accentuate where humans are the strongest. And so ultimately, one of the things that we hear consistently in the marketplace is that brokers are left hanging too often. They're waiting for responses, and sometimes it's because underwriters are busy. Sometimes because there are other questions that have not yet been resolved. And so AI can be very powerful in terms of one, giving us observations about any individual risk and understanding what is important for us to know that'll help us make a better decision. But it actually behooves us to be proactive about that insight and really share it with our distribution partners so they can know in advance, what do they need to know in order to better represent this business and help them find the right coverage. And then when you actually do that well, you can help them know in advance, is this risk out of appetite? If so, that's important. Conversely, if this is actually a great risk, well, then we should be able to move forward with a quote and bind it even faster. And so thinking about how AI plays into that equation, it really comes down to bringing more transparency, bringing more speed, and really bringing more predictability to brokers so they know exactly where they stand and how they can best serve their customers.
Yeah, great points. I think all these great points, and just in terms of looking at the time, I think there are a couple things that I'd like to reiterate here and just kind of bring it back to again CapSpecialty and how we're thinking about this stuff and trying to infuse it into various parts of our business. And first, in my idealist world, every ENS submission would begin with a story about why the risk is in the ENS market in the first place. We know why we're in this business, and others know why we're in this business. It's to solve problems. This would at this level of kind of pure honesty at the outset, it would help us to really kind of laser in on what is the problem. Let's structure the right solution around that problem. It's kind of tough. It's again the real useful information is not necessarily the stuff that's going to get presented in an application. And sometimes you'll hear the story. Maybe sometimes you'll hear it partially, and then other times there just might not be enough time to gather that information. So I think that quickly, as you say, right, but quickly being able to gather the stuff that we think is relevant, so that we can understand. Okay, now let's put the right solution out there that we think is going to give the right sort of aggregate protection for the really unforeseen event that's going to kind of help keep that business in place when something terrible happens, but also ensure that we're not picking up bad risks and bad actors. So to me that is a way that artificial intelligence is already helping us in our business in a way that I'd like to see it go even further in the future. Think that we're all stressed for time and capacity, and I think this is a I'm very optimistic about this being a way for us to add speed and certainty to the underwriting transaction. So we're right at the 25-minute mark, and I just like to say again, thanks guys so much for joining today and sharing your time and thoughts on this, and I appreciate all that you do.
I do thank you for having us, Dan, and looking forward to continue to drive, AI and its impact within our dear insurance industry.
Awesome. All right.
Thank you,
Thanks,
Dan,
everyone.
for having us. Thank you all.
Thank you, everyone. Have a great afternoon.
Take care.